Hello students, welcome to today's session on the topic partnership deed. So now I will be talking about partnership deed and various provisions of partnership deed. Okay. So as we know, partnership comes into existence as a result of agreement among the partners. This agreement can be either oral or written. There is no hard and fast rule among for the partners or to make it in writing only. This is basically to understand each other's requirement and to respect each other's existence and contribution in the business. Okay. Thus, the agreement can be either oral or written. Now, the Partnership Act does not require that the agreement must be in writing. But wherever it is in writing, the document which contains the terms of agreement is known as partnership deed. And in today's lesson, we are going to talk about that only. Okay. Moving further from here, now, what does exactly this partnership deed talks about? So basically, the partnership deed talks about mainly the objective of the business. And here I would like to mention the objective of the business should be ethical, right? And as per the rules and regulations of the country where you are putting up your business. Obviously, you cannot go against the rules of the country. So the first thing, major thing that this partnership deed talks about is the objective of the business. And then this also talks about the contribution of capital by each part, very specifically, very clear. Then the ratio in which the profits and losses will be shared by the partners and also the entitlement of partners to interest on capital, interest on loan, etc. Right. Now here I would like to clear some particular point which usually is debatable in the classes of mine, as well as it's a point of confusion also. When we say profits and losses will be shared by the partners, so again, uh, the you would have seen the questions like the partners are sharing profits in the ratio, say 3:4, right? So if the statement says the partners are sharing profits in the ratio 3:4, means partners are only sharing profits in the ratio of 3:4. The partnership deed here is silent on the sharing of losses. In this situation, the losses will be shared equally. But if the question says the partners are sharing profits and losses in the ratio 3:4, that means here partnership deed has specified both profits and losses are to be shared in the ratio of 3:4. Thus, they will be shared that way only. Okay, guys. So we continue from here. Right? And now I will be talking about various contents of partnership deed, which is quite important part. Okay. So now let us talk about the contents of partnership deed. Okay. Hmm. So the partnership deed, as I said, it's a written document specifying the do's and don'ts from the partners. So this partnership deed contains these many informations or these many details. First of all, it talks about names and addresses of the firm and its main business. Okay. Then name and addresses of all the partners are to be mentioned here. Amount of capital which is to be contributed by each partner also has to be mentioned here. Then the accounting period of the firm. This we will be talking in our next video. What does this accounting period mean? So accounting period of the firm also has to be mentioned here. Date of commencement of partnership is important, right? Then rules regarding operation of bank account. That is one partnership partner on behalf of the entire partnership firm will be operating the bank, or is going to be a joint account between, say, for example, there are two partners, so they can have a joint account in the bank. Very simple. Or they are going to appoint some accountant and give him some such powers that he can operate the bank account on behalf of the firm. So, rules regarding operation of bank account. Then profit and loss sharing ratio. This I have talked about just now. Rate of interest on capital, loan, drawings, etc. Okay, we will be talking about a little later about this also. So rate of interest on capital, loan, drawings, etc. also has to be talked about. Then mode of auditor's appointment, if any. Yeah, right? So since it's a business, it's a professional thing which is happening. Therefore, if the partners feel that they need to appoint an external auditor from time to time, or maybe at the end of the year to audit their books of accounts, so what is the mode of auditor's appointment would be? That also has to be clearly mentioned here. Salaries, commissions, etc., if payable to the partners. Okay. Then the rights, duties, liabilities of each partner has to be mentioned. Treatment of loss arising out of insolvency of one or more partners also has to be clearly mentioned here. Also, in this regard, also has to be mentioned that in case, say, majority of the partners get insolvent, whether the business uh, dissolves completely or uh, uh, be converted into a sole proprietorship business. How it has to be done. There's settlement of accounts on dissolution of the firm. Methods of settlement of disputes among the partners. Rules also have to be followed in case of admission, retirement, death of the partner, and last but not the least is any other matter which is related to the conduct of business also needs to be mentioned here. So what we can say, normally a partnership deed covers all matters affecting relationship of partners amongst themselves. However, if there is no express agreement on certain matters, the provision of Indian Partnership Act 1932 are going to be applied here. Okay, right? All right. Then again, uh, important part, that is what will happen or what to be done in future if the partners feel that the uh, deed has certain points, certain clause which are no more required, or maybe they want some alterations, some kind of changes in the uh, partnership deed. Then, yes, it's not a hard and fast thing that yes, once it is done, it cannot be altered. The clauses of partnership deed can be altered, but with the consent of all the parties. The deed should be properly drafted and prepared as per the provisions of Stamp Act and preferably registered with the registrar of the firms. Okay. Now, hmm. uh, one more point which I would like to mention out here, along with this, is the Provision of Partnership Act relevant for accounting. Now, this is important, right? So, I thought I would be taking up here. So, there are certain points to be talked about here. First of all, profit sharing ratio. We have already talked about the profit sharing ratio earlier, but talking about, since we are talking about the accounting part of partnership business from the perspective of Partnership Act. So here the Act says the profits of the firm, or you can say the profits of the firm should be equally divided among the partners. Now, but if the deed mentions some other person sharing ratio, then obviously the deed is supreme to the act in this case. That will be followed. But in the absence of any such ratio, any such proportion mentioned in the deed, the Partnership Act provision shall be applied here, and then the profit sharing ratio will be interest on capital. Now, according to Indian Partnership Act of 1932, the partners are not entitled to get any interest on the capital they have contributed. But if partnership deed provides for interest on capital to be given at a certain percentage, then it will be provided to the partners. Similarly, for interest on drawings, according to again Indian Partnership Act of 1932, the partners are not supposed to pay any interest on drawings or withdrawals they have made from the firm. But again, if the partnership deed provides for interest on drawings to be charged, then yes, they have to pay at the percentage mentioned in that deed. Interest on partners' loan. So according to Indian Partnership Act, it is going to be 6%. That is, if partnership deed does not mention any other percentage otherwise. Last but not the least, the remuneration for the firm suit. Again, the same remuneration means salaries or commission, right? Now, Partnership Act considers the partnership business and partners to be one. And therefore, according to the Act, the partners should not be given any remuneration for the firm's work or firm's business that they are conducting, as considering the fact that they are conducting their own work, right? But again, if the deed talks about this, if the deed specifies, then yes, that remuneration will be paid to the partners. But if the deed is silent on this, then no remuneration has to be paid. Right? So that's all for today's session, students. I hope you all understood the topic well. Keep practicing, and I'll see you next in the same time. If you have any doubts, please contact me through my Urban Pro profile. Thank you very much.